Street Journal reporting on its front page this morning, U.S. companies are warning of a slowing economy. Quarterly profits and revenues are poised to decline for the first time since the recession. For more, let's bring in Cumberland Advisors Chairman and Chief Investment Officer David Kotok. David, your take on this headline. A lot of warnings coming out this morning, and this of a slowing economy and weak corporate profits.
Strong dollar, that hurts one sector. Energy prices down, hurts the energy sector. We're going through transition, and we're in much lower, regular, normal, linear growth. Think of us as a 2% growing economy. That's where the U.S. is. So you're going to have earnings compression. It's expected. It's going to happen. We're going to see more of it. The growth rate of the United States is lower. The earnings lower.
David, the chief financial officer of Fastenal is quoted saying the industrial environment's in a recession. I don't care what anybody says. And of course, they cite a third of the top 100 customers for Fastenal's nuts, bolts, and other factory and construction supplies have cut their spending by more than 10%.
If you're in North Dakota and you've had a boom in the energy patch for the last 4 or 5 years, you're in a recession. Your housing prices are now falling. Your unemployment rate is now rising. You have all the characteristics in narrow geography of a recession. If you're the United States and you have 350 million people and you're 70% services, you are buffered both in the boom and in the recession. So you wobble back and forth in the middle. We have zero interest rates, no inflation. We're creating 2 million new jobs a year, not 3 million, but 2 million. It's a plus number. That's good. Slow growth. That's what you get when you come out of a recession like we had in 07, 08, and 09, and a financial crisis. And we're going to have more of it. It's going to go on for the rest of the decade, and the rest of the world is going to suppress robust growth and inflation. That's what we have.
That's a pretty optimistic view of things. So you're saying that the slow growth continues, that we may see earnings down this quarter, maybe next quarter as well, that there'll be sectors of the economy that look like they're in a recession, but that overall the U.S. continues to grow and unemployment continues to stay low?
I think so, and I think we have that for the rest of the decade. And what Europe is doing and China is doing and Japan is doing only furthers it. It makes the benign, low inflation, low interest rates, slow recovery forecast more robust.
Well, because the real weakness here in the United States, and you've seen the trickle down into the industrial companies, is what's happened in energy. But you have to factor in the benefit to U.S. individuals with the lower energy prices, particularly if we can get to a level where oil and gasoline stay relatively stable, because we've had to deal with so much volatility. Nobody could ever make plans and plan their lives out based on the wild swings literally in the last decade that we've had in gas prices.
Well, I think so, and I think we've gotten a population in the U.S. which is slowly accepting that this is a permanent shift. And it takes that to alter things. So you've got savings up, you've got the benefit of the lower energy price. It hasn't passed its way through to make the recovery more robust. It will. It'll take time. Can't speed it up.
How does that manifest itself when it does happen? People drive more? People buy more?
Well, people drive more. You know, there's another interesting thing in the automobile industry. We have Volkswagen, and what's going on in Europe, we're going to change diesel. We're going to have a whole new generation of automobiles forced on us by a scandal. And when that comes, you'll get the positive growth. That's ahead of us. I think there's a big new Moore's Law auto boom in the next few years because of Volkswagen.
I still feel like we're talking about this slowdown, and this article in the Journal this morning that's getting all this attention is talking about this slowdown as if it's cyclical. And I wonder how much of this is manufacturing just going away and never coming back to the United States.
I think you hit the nail right on the head. Things have changed. Now, you never should say in this business, this time is different. This time is different. We have a structural change. It's not about goods, it's about services. And the distribution of services around the world are now in the technology sector. You will see robust growth in technology, even though you don't see it in the industrials.
Well, and the article does point that out. There are pockets of growth, like aerospace is another spot that they point out for strength. All right, David Kotok, thank you for joining us this morning.
Thank you for having me. Nice to see you.
Great to have you. All right. Well,